First of all, more data is always better, but specific to Apple, this is a closed ecosphere. When you sell a unit, an iPhone, an iPad, or a Mac computer, you're asking that person to buy services on an ongoing basis with the hope that their ever-increasing use of memory and everything else keeps driving margins up and sales up. Nobody asks Microsoft how many devices they're connected to, Facebook, Google, because they're completely open as an architecture, not Apple. This is a mistake. Apple should be giving out all the data every investor wants all of the time when they're building it off the Trojan horse. That's what an iPhone is. So it's a key metric. If sales go down dramatically in a 90-day period, if I was a shareholder, and I'm currently not, I would want to know. I want to know that data because that's how I get new customers, and now I don't get it. It's never good to give less information. I can't see the merits. This idea is a bankrupt one, and it has no merits at all.
I mean, I guess the flip side is that Apple feels it's no longer relevant and won't tell investors the story they need to hear. Jim Cramer earlier came on, and he compared it to Procter & Gamble, I thought, in what was an effective argument of why Apple is doing this. Listen to this.
The fact is that when you're on the Procter & Gamble call, which happens to be another great consumer product company, do they tell you how many razors they sold? Well, let me tell you, they don't. This is a consumer packaged goods company. They need to be followed by totally different analysts. If this company were followed by the people who do consumer packaged goods, it wouldn't have a 16 multiple, it would have a 22 multiple.
So, Jeffrey, maybe you need to start thinking like a consumer packaged goods analyst.
Well, maybe I do, but I don't think so. You know, I've covered handsets for 20 years, and I have a pretty good handle on how things go, so I'm comfortable with the methodology that we've been using. Apple is, of course, free to report what they want to and what they don't want to. My preference would be that they would give us some insight into how often people are purchasing the device and what they are paying. I think those are two different orthogonal variables that are important for us to understand the strength of their ecosystem.
I guess, Kevin, not liking the move is one thing. Not liking the move enough to stop liking the stock is another. They got a lot of you're a cash man. You love cash. They got more cash than pretty much everybody in the world, almost combined. So you may not have a love affair. Do you have a like affair?
I do have a like affair, but remember, this is in the FANG group, and the FANG groups have had a new narrative going on about compressing their price-earnings ratios. Apple was escaping it for quite a while until this event occurred, and now it's going to be punished for it. I don't think it's going to get a 30% downside like some of the other stocks, but I'm going into a more conservative mode in terms of my equities. I'm looking for the definition of quality being balance sheets that are being delevered, cash flows that are increasing. I don't like any controversy. I'm getting really boring these days. And that's been good for me. That is actually outperforming the S&P now. The S&P seems to want to punish any company that is not uniform in terms of A, its reporting, or B, any major changes, or worse, missing estimates. They're all punished. And the average punishment's 10%. It's not a small amount. 10% of the market cap of the world's largest company, that's a lot of dinners. That's a huge amount of money that vaporized here for a reason I don't understand. I can't understand why it's good for me not to know how many iPhones are sold in a quarter. And when is it good for a CEO to say, I think you should digest our data this way. We prefer you do it this way. Walk this way, dance this way. I don't want to walk that way or dance that way. Give me the information. Let me decide what's relevant and what isn't.
All right, Kevin, Jeffrey, we're out of time, but thank you. Jeffrey Kvaal, by the way, taking his price target for the stock from $215 to $185.